beginning because here's the thing, if you would have if you already knew it was a guarantee it was gonna hit TP, would you be scared to take it? No. You wouldn't be scared to take the trade if you already knew it was gonna hit your take profit. But since you don't know that, you're scared to take it because you know it's a possibility of losing. So you got to understand that, okay, in order for you to be profitable, in order for you to even be profitable, you have to accept that you're going to take losses and you're going to take wins. You can't spell million without a couple L's. You got to take L's to continue to get to where you need to be. Two is it's inevitable. That's another thing you have to accept. Us as traders, we tend not to accept the one thing that we have to accept, which is you're gonna take wins and you're gonna take losses, just like life. You're gonna have good moments and you're gonna have bad moments. Those are just two things that are inhumanly impossible to avoid. Our job is to make sure that we stay positive. Your job as a trader
Mm,
is to make sure that you continue to make money, that you end up on top at the end of the day. When you're trading these prop firms, you need to look at trading more so of you don't get a payout from what you made. You get a payout from what you saved. And because you're gonna trade and you're gonna lose. So while some people they may be sitting there with a 50% win rate and they end their week negative 1,000, but you ended your week positive 1,000 with the same win rate because you knew how to preserve your capital. Emotional regulation, and not a lot of people know how to regulate their emotions. I figured out a way to indirectly mask all of that, which is with proper risk management and understanding your intrahuman design, pretty much your nature, how exactly you trade. And that's why we face all these psychological battles is because we don't know how we are supposed to trade. Yes, you might have a way that the general population trades or a way that specific people scalp or a specific way of intraday trading or a specific way of this, but that might not be for you. So now you have all of these psychological barriers to surpass when in reality, they're there for a reason. Why fight them? Use them to your advantage. Instead, we try to fight them and try to
mhm.
force ourselves to trade the way that the world trades. But no, some people are profitable scalping. Some people are profitable intraday trading their specific way. Like at the end of the day, all of these strategies, it's the same exact strategy, but what determines if you're profitable or not is just who's implementing it. Who's implementing the strategy? Is it for them or is it not for them? Always turn around and look at yourself when it comes to the situation. So that's what I will say. But I made this PDF for you
Okay.
that we're gonna go over today. And I'm gonna send it to you on Discord as well or WhatsApp.
Mhm.
We're gonna go over it and then we're gonna come up with a preservation plan so that you understand how to really preserve your capital properly and effectively. So
Mhm.
yeah. Um, and so pretty much the title of it says breaking the reset loop, which that's pretty much what I came to the conclusion with. You're in a loop right now, just trying to figure out, okay, you have an account, you blow the account, you get a new one. You have an account, you blow the account, you get a new one. And how do we fix this rhythm, this pattern, right?
Mhm.
So the subconscious loop, pattern recognition, it says the trader repeatedly seeks fresh starts because chaos feels familiar. Passing a combine, then blowing it isn't random. It's the rhythm of emotional reset. This rhythm isn't self-sabotage, it's a subconscious attempt to regain control through failure. Would you agree?
Oh, yes,
Okay.
yes.
It says understanding this loop is the first step towards breaking it. The pattern feels comfortable because it's known, but it's keeping you from the consistency that you crave.
Mm.
So, reflecting question is describe your emotional state before every blown account. What patterns emerge? So describe every emotional state. Well, you ain't got to do it now, but just in the moment. Describe your emotional state before every blown account. What patterns emerge? Reset narrative. What did you tell yourself right before entering the market after a failure? And then emotional impact. How did starting over make you feel emotionally and mentally? Okay. Like I say, you'll have this file, so you'll be good to go.
Okay.
Now it says your intrahuman design. I'll put you in the category of like a reactive stabilizer. That's what you are. And this is your blueprint. It says this design type acts fast, learns fast, resets fast, says the emotional rhythm thrives on momentum and novelty, but collapses without structure. Your speed is your superpower when channeled correctly. So you crave movement, seek
Oh my
validation.
goodness, how did you know that about me?
I just went through it. I read what you said. You
Oh,
crave
wow.
you
That's
crave
okay. Okay.
You crave movement, seek
Mhm.
validation through action and quick decisions. The need for speed drives your behavior. Then you have emotional balance. You tend to find equilibrium through fresh starts and new beginnings rather than persistence, meaning you don't do a very good job at persisting, continuing doing the same thing. You tend to like to
Oh,
re-regulate yourself and gather your bearings.
oh my gosh.
And then discomfort and stillness. It feels uneasy during slow growth or periods of boredom and stagnation. Meaning, even if you are growing, you have a hard time recognizing it. You need to see it now. So, the objective of all of this is pretty much to turn that speed into mechanical repetition instead of emotional reaction. Your rhythm becomes your edge. So instead of fighting it, embrace it and turn it into something that you can capitalize on.
Okay.
No, it says mechanizing. I think that's how I say it. Mechanizing the rhythm.
Hmm.
Understanding control. It says emotional control manifests as fear, hesitation, or revenge trading. Mechanical control is structure. This is why I say it. Because when people say you're controlling from an emotional standpoint, it always gets perceived as negative. But if you say control from a mechanical or structure standpoint, it's looked at as structure. So
Hmm.
all you got to do is shift the perspective. If you feel as though you're controlling something or or you don't have control of a situation, take control of it in the moment of the market. Pretty much what I'm saying is the
Oh,
market
I've been doing that.
the
I have
market
implemented that.
Exactly. So like the market is the only thing that cannot be consistent. What do I mean by that? 1 minute is buying, next minute is selling, next minute is consolidating, next minute is news. You're the only entity in the market that has the ability or the conscious, even just the consciousness to even make the decision to be consistent. Meaning, if you continue to adjust your dollar amounts, your risk, your parameters, how big your trade is, how small your trade is to the market, that means your money gonna be flat, your money gonna be inconsistent as well. Some days you're gonna make a lot, some days you're gonna make a little bit. Unlike what most people do, for me, my money stays the same. Like I come in the market day in, day out, continue to do the same thing, and I don't care about the outcome. If I lose, I lose. If I win, I win. It does not matter because I know I'm good at the end of the day with proper risk management. And we'll get into that. Um,
Okay.
it says emotional control manifests as fear, hesitation, or revenge trading. Mechanical control is structure, repetition, and quantifiable process. It says the shift from emotional to mechanical control is where transformation happens. It's not about suppressing emotion, it's about channeling it into structure. So one, you got, well, I'm not even gonna go through these. We don't even really need those, but now we'll get into this capital preservation mechanic. It says
Okay.
scaling through consistency. The goal is not to chase winning streaks, is to preserve your rhythm. That's the thing. That's what most people tend to do. They're trying to chase a win. It's not about that. It's about preserving yourself for when the losses come. You don't get a payout based on how much money you made. You get a payout based on how much money you saved. Because when people take losses, they usually get knocked out. The account gets blown. But for us, you still get that payout. So it says the goal is not to chase winning streaks, is to preserve your rhythm. Set fixed risk per trade and maintain the same structure regardless of emotional state. Use consistent risk to reward ratios like a 1 to 2 or a 1 to 3 to remove decision making during execution. Repetition equals control. Doing the same thing repeatedly builds neural pathways for automatic execution. That's why I call it mechanical.
Okay.
Control equals structure. Control emerges from predictable, repeatable frameworks you can measure, and structure equals scalability. Once structure is solid, scaling becomes a function of mathematics, not emotion. So, for example, if you have a fixed risk of $250, you're
Hmm.
gonna take if you're risking 150, if you're risking 250, you're gonna take a 1 to 2 risk to reward on your first trade that's your conservative approach. Now for your second trade, you're going to risk 150, but target a 1 to 3 risk to reward ratio. That's your aggressive approach. Maintain consistency regardless of outcome and never deviate mid-session, meaning allow everything to play through. We don't care about the battle that we're fighting per trade. We care about that payout and that war at the end of the week. We don't care
Mm.
about the little battles. We don't care about the little trades. We don't care about the little hits. As long as we get the knockout, we win. That's the only thing that matters. Now, self-assessment framework. Track every trade with brutal honesty. You can either track a trade or just or not. To me, it doesn't really matter. I put it in here because that's pretty much what the public says is to document your trades, but I don't like documenting my trades. Um, I
Oh, that helps me so much because I have
documenting.
such an aversion to doing that.
Okay,
I don't
perfect. Then
know
yeah,
why. I have a
doc
great aversion. Oh,
document your trades because I have a in the WAP, I have a let me go to it.
okay.
I have a trading journal. You should have access to a trading journal and you can journal your trades
I
on
don't
there or
have all
whatnot.
that.
You can journal all your trades.
I don't
Um
have all that. When I clicked on that trading journal, one page comes up. I don't know what else.
what
There's
page?
nothing else there.
Okay, I probably have to approve the permissions. Okay, I'll go over it. But
Okay.
you'll have access to it. I'll make sure you get it. So it says
Okay.
track every trade with brutal honesty. This table becomes your mirror, reflection. Reflecting patterns you can't see in the moment, but becomes obvious over time. So obviously, pretty much you get what that means. Just document your trades pretty much. Weekly
Okay.
reflection, rhythm assessment, and mechanical movements. Now your pre-market design alignment. All right, this is pretty much towards the end. It says from chaos to calibration. Before the market opens, calibrate your internal state. Check in with your emotional rhythm. Are you trading from structure or are you trading from also are you trading from structure or from need? So meaning are you coming into market? Meaning I don't trade with a bias. I don't trade technicals. I don't trade any of that. I trade straight mechanical. The market comes to me. It comes to my levels. The 786, the 618, the 382, and the 236. It comes to my four main levels. And when the price comes to those levels, I take my trade and I don't care about what happens. And regardless if you're trading my strategy or not, regardless of how you're trading or what way you're trading, you just want to make sure that it's mechanical. Every strategy is mechanical, but the person isn't. You want to make sure you come in every day, every night, whatever time it is that you trade, and just execute. Don't come in the market with a bias. Don't come in the market with no crazy specific directional analysis. Just mark up your chart with no lenses and allow the market to play it out. Because here's why. When you come in the market with a bias, you're gonna subconsciously look for anything that what supports your bias. You're not gonna do it on
Mhm.
purpose, but it's gonna be subconscious. So while the market literally might want to sell the entire day, but your bias is bias. You just set yourself up to lose the entire day. No matter what you do, you're
Mhm.
gonna lose because your bias is bias, and that's what you're gonna look for.
Okay.
So when I trade, I don't trade with a bias. I just allow the market to do its thing. So that's that. It says this pre-market ritual becomes your anchor point, a moment to choose mechanical over emotional structure over chaos.
That makes sense because in
Mhm.
every course that I've taken, I was taught to look for a bias.
Yeah, I don't look for no bias. When you look, yeah,
So
don't look for a bias.
that, yeah.
Because when you look
Okay.
for a bias, you're over here you're literally taking your own human mindset and trying to collaborate with the market that has no mind. Like the market doesn't care about what you think or what you think it wants to do or what you think it's gonna do. Like the market could care less. So since the market doesn't care, how about you just come in the market and execute? Like why I don't know. I just don't trade with a bias. I don't like it. Every time I come in
Yeah,
the market and think some shit gonna happen, it's not gonna happen. Honestly. It's not gonna happen. So I just
that has
allow the
been
market to
the
do
case
its
for
thing.
me.
Say it again.
That has been the case for me as well.
Exactly. Exactly. So here it says the market doesn't repeat, you do. Once your rhythm learns repetition equals control, consistency replaces chaos. So I'm gonna say that one more time so you understand it. It says the market does not repeat. Well, it doesn't. It says the market doesn't repeat. You do. Once your rhythm learns repetition equals control, then consistency replaces chaos. So what you're doing, you need to recognize that it means repetition. In repetition, you need to recognize that your repetition allows you to have control of what you're doing and just be consistent in what you're doing. And that ultimately is going to replace chaos because now you become aware that who has control? You. And now, boom, chaos replaced. Um, this is pretty much for you. You can go through these. You can go through this right here for you. And then yeah, that's about it. Last one, it just says moving forward.
Mhm.
You now have the framework to break the reset loop. The work ahead isn't about becoming a different trader. It's about calibrating the trader you already are. Your reactive stabilizer design is powerful when channeled through structure. Remember, the market rewards consistency, not complexity. Your speed becomes your edge when paired with mechanical repetition. Start with one setup, one direction for 21 days, track everything, review nothing daily. The loop breaks when you stop fighting your rhythm and start calibrating it. And that's your pre-market design. So that is everything I wanted to go through with you.
Okay.
And if you have any questions, let me know now. Is there anything that you want to also tap into? Anything you want me to add to this?
Well, I actually have another question. I don't know if this is applicable
Okay.
or, but I do appreciate this because this makes sense to me. And
Okay.
so this is helping me to understand myself.
Understood.
However, and that helps a lot. Thank you for that.
No
So it's
problem,
so
Miss
well
Mom.
worth that. Now, when I was looking and I saw the opportunity to to get this one-on-one with you, I noticed you also have something on your site about the top step 149, the
Yeah,
one
so
fifty account.
I believe you're talking about the account plan. The
The
account plan
account.
purchasing. Yeah, so yeah, this is the basic capital preservation model. Um, all it is on I'll just show it to you honestly right now. Hold on.
Well, while you're doing it, let me tell you why I was interested, and you let me know if I'm on the right track or not. Okay, so I have won a couple, gotten to the funded stage for 250K
Uh-huh.
accounts, and I have blown them. The
Okay.
most recent one, the last one that I got was working through Romel.
Okay.
Well, when I started learning and wanting to implement what he was teaching.
Okay.
And so that's how I got that, but then I blew it. So when I blew that one, I thought, well, maybe my issue is I want to see larger numbers. So I'll go up an account and it's on sale. So I got 100K account
Hmm.
for while it was on sale. And I thought maybe that'll help. And that's the
Okay.
account that I was speaking
Well,
about
look,
that I don't want to blow.
look, look.
Mm-hmm.
I got you. So when it comes to everything that we just went over,
Yeah.
this is here to hold on, give me one sec. This right here, this is here to help you understand yourself. That's number one.
Okay.
Understand who you are and how to take what you think is negative and use it as something positive. Okay,
Yes.
that's one. Now that once you grasp this and you become aware of the type of trader that you are, and you become aware of how you operate, then you come here and you apply where is it at? And you apply the capital preservation effectiveness plan. This is all that is. This is showing. Okay, so me personally, my win rate is about 74 total right now. It's about 74. My fibs give me 74% win rate. But all you need is a 28% win rate to be profitable. I'm not gonna go all the way through this. I'm not gonna go all the way through it, but this is if you stay true to this, you're not you're I just had a student, like I have students that are literally getting payouts now. Like I had a lady who started trading. I have a
Want
lady
my
who's
first payout. Can I get a first payout,
yeah, I had a
please?
lady that started trading August 3rd and she got her first payout October 5th. I mean October 8th.
Mm. Oh my.
Yeah, she knew nothing about trading. She knew nothing. I taught her how to trade, but regardless of the skill, she followed the capital preservation plan because she knew that it just gave her mental clarity that like, yo, I don't all she has like a right now she has a 41% win rate, meaning out of every 10 trades she takes, she only
Mhm.
wins 4 and she just got to pay out. She's doing perfectly fine, doing her own thing. I
Wow.
haven't even really talked to her like that because she's doing her own thing. So I mean, yeah, when it comes to this is very good. This is my favorite. It's like the most general 150K top step capital preservation plan. I got to make a 50K one and a 25K one for the people that get 25K accounts with Aqua Futures. Um, but yeah, it's not about bigger numbers. You don't need to see bigger numbers. You don't need to see smaller numbers. The number amount does not decide anything. It doesn't determine nothing. You're going to blow an account with 150K and you're also going to blow an account with a 25K if you don't know how to properly risk. If you learn how to
Yeah.
properly risk, then you're good to go. If I may ask, what way are you trading now? Are you trading Holy Grail, Wixos, or are you trading something totally different?
Um, you know, just being per completely transparent. I'm not gonna lie. I somehow in my mind have it all mixed up because I've looked at it all. And now I wick sauce and inverted wick sauce, I see that easily. But I want to, well, because I want to be perfect as I possibly can be, want to trade Holy Grail. However, I've taken an assessment and think at this point, I really just would like to get to a place of consistency so that I can get my absolute first payout in 7 years. Start to
You
recoup.
you
That's
need to
what I
for
want.
you need to forget everything you know.
I know.
Yeah, I'm just like just being honest with you. Like you may not like it, you may not want to hear it, but you're gonna have a hard time, honestly, just because you know, just off of the simple fact that you know so much.
Mm,
It's gonna hinder you and it's gonna be hard. Honestly, that's just the reality of it. Some people it's usually easier for people that don't really know too much to grasp it, but since you know so much, it's gonna be harder unless you have the ability to honestly just make it simple for yourself and just block it out and just literally learn something fresh. It just depends on what you want to learn. But whatever it is that you do learn, whatever it is that you do decide, either Holy Grail, Wixos, ICC, anything. It doesn't matter. My strategy, whatever it is, just stick
what is
to
your
it.
strategy?
It's called pre-market design. It has to do with Fibonacci sequence. I draw my levels from the low to the high, from the lowest point of the weekly. Then I draw
You
my
have
second
three.
fib inside. It's a whole bunch of like little things. It's on my
That's
WAP
where you
actually.
have the three sections, the premium, the middle, and the well.
Yeah, that's what it is. Yeah, the premium auction and discount having my direction model incorporated with my entry model. Yeah.
Oh, okay. I saw that. I saw how that lined up. That was awesome. I
Mm.
never saw the fibs used like that before.
Yeah, their use pretty different. You're not gonna really see it nowhere. But regardless of like the strategy, like when it comes to any strategy, it is.
You have to be consistent with what you're doing the same thing over and over and over. And I totally understand
Yeah.
that. I think at this point, I probably just need to choose um one and just do that. You already told me that. Didn't you say do it for 21 days in one direction?
Yep.
Or that's what's in my plan.
Exactly. Yep.
Okay.
Do that for 21 days. Have one style of trading, or whatever style you decide, and just
Mm-hmm.
trade that for 21 days, jock it down, develop a relationship with the way that you trade. Because here's the thing, you might have a person that trades the same way that you trade, like the same strategy, but they actually trade totally different. That's the thing. Like we all like they may trade the same strategy, but they still trade different. And you just got to figure out what is your way of trading. And yeah. So yeah, so this is that. This is the understand you or whatnot. And then your capital for a 150K account, that capital for the 150K, that capital preservation plan would be right here. This is what you will want to be doing for the 150Ks. And if you need a 50K or 20,
Well,
whatever
it's
account
a
size you
hundred
need.
K. It's a
Huh.
100K. It's not a 150K. It's a 100K.
Okay.
But I have a coupon that expires in December for 40% off any size account. So I have the option of getting a second one.
Okay,
And
well, I can
I
go
want to
ahead.
get 150K, but I don't want to do that until
Don't do
I'm
it.
confident.
Just trade your 100K right now. You have all the way, you have till December, so you have all of November. Um,
Yeah,
just
yeah.
trade your 100K now. Trade your 100K and I'll make you a capital preservation plan that goes with that. Um, But honestly, you don't need to trade anything. You don't even need to be touching an account. You don't even know how you want to trade yet. So how can you if I mean you're a grown woman, you could do as you please, but just know
Right.
if you go inside of that account, that 100K account trading, I bet my money on it you're gonna blow it because you don't know exactly how you will want to trade. So in the meantime, I'd say just
I won't, yeah, I'm very disciplined. That's why, well,
okay.
actually I'm down on it, $800. And at that point I was like, no, I'm not doing this anymore. That's when I closed it and I have not been back in it. And I sent that message on Discord. I don't want to
Mhm.
blow another account.
When did you purchase the account?
Like 2 days before, and it took me a couple of days to even,
Okay. You got time. Okay,
yeah.
so just just continue to trade, but are you demo trading? Do you know how to demo trade?
Yeah, I know how to demo trade,
Okay, perfect.
but I'm not gonna go back into that account until I feel like
Okay,
I
then yeah,
have
do that.
something.
Do that. Take
If
your
I have to
time.
pay another month subscription, I'm okay with that.
Okay. Um Actually no, you don't it shouldn't take you that long. I'd say just take 2 weeks. Starting it's take this weekend to just chill for the next 2 weeks. The next 2 Mondays, just understand how you're trading. Be very aware and intentional when you're placing your trades, demo trading or
Okay.
not, back testing or not, just studying the market, understanding how you want to trade, going through Armel's videos, going through my videos, going through whatever video that it is that you're watching, and grasp exactly what you want to do and then embody it because the market will teach you more than any mentor can. The market will teach you more than I ever could. The market will teach you more than Romel ever could. We're just here to guide your hand and hold your hand throughout the process of it. But if you don't actually
Mhm.
implement and embody what it is that you're trading, then it'll never click for you. So that's probably what I'll send you off to go ahead and do from now on.
Okay. I will. I will. Well,
And
I
this will
appreciate you
also
so
be
much.
recorded for you too. So yeah.
Wonderful, wonderful, wonderful. Thank you so very much. You've helped
Yes,
me a
ma'am.
great deal.
Yes, ma'am. No worries. That's perfect.